Kari Firestone, today says it's time to buy the most beaten down names. That's something, Kari.
Well, you know, Scott, markets tend to overshoot both on the upside and the downside. I would agree with Brad. We had this enormous run of particularly technology names, the cloud computing stocks, the electric vehicle stocks, biotechnology stocks. We had a year plus where people were home. Lots of investors were, for the first time, buying stocks using Robinhood and other apps. You had billions of dollars going into funds like ARK Invest. Mutual funds bought them. Hedge funds bought them. They went to the moon, and then they began to correct. And they've corrected, in our opinion, too much. So if you have a list of stocks, 50 names in the NASDAQ Plus that are 50% down from their 12-month high, and many of them are earning big dollars, lots of cash flow, selling at multiples we think are reasonable, you have to begin to buy them. That is the nature of what we do. When you have people saying at $120 a barrel that it's just the beginning, that oil is going to $250, and that there are no buyers for any tech stocks, and they're going to continue to crash, we have to say to ourselves the most difficult decisions, the ones that make you uncomfortable and a little nauseous, are the ones in which you make the most amount of money. So, yes, we believe that this is the time to start buying, and investors should start to sell some of those names that have carried them over the last few months and have continued to hit new highs recently, and buy some of what has bought, you know.
Let's get specific, Kari, okay? Because when you say, you look at some of the things that have made you nauseous, I mean, DocuSign. You say it's time to look at DocuSign. The stock was $314, 52-week high, 52-week low, $71. Today it's $72. You suggest to take a look at Square today. That stock has gotten hammered too. Scott Minerd yesterday on Closing Bell with Sarah said that he thinks that stock's attractive, along with PayPal, owns both of them. Square, $289, 52-week high. 52-week low, $82 today at 97. We're talking that specific on those kinds of names?
Yeah, exactly. I mean, Twilio, PayPal, Shopify, DraftKings, Zoom, Block, Square, whatever. I mean, these are names that have been destroyed. I mean, this is the sort of thing at the bargain rack at TJ Maxx. It's not even on the bargain rack. They can't give this stuff away. So I think you have to begin to say, okay, if PayPal is 16.5 times next year's earnings and Twilio has a $100 billion addressable market, look at the companies and say, okay, we buy a little of this today, not the whole position, wait and see what happens. You know, this is a choppy market. I'm not saying that they're going straight up, but I am saying that the market is not it's not finished with these names. You look at the NASDAQ down 23% from its peak. It's one of the worst, periods of time in the NASDAQ history. So, let's be real. We're investors. This is our profession. So if you feel like you're going to throw up, that's part of the job.
Yeah, I hear you.
Excuse me while I do.
It's a big call, but when do you go from looking to buying, right? Two different things.
Yeah. Well, last week we had a new account and we started to buy these names.
You did? Okay.
In that account. Yeah. No. We're spending some money. We have retained a lot of our holdings. We had sold some, and we've talked about it over the last few months, positions that were high, like some of Sherwin-Williams, Thermo Fisher, names Blackstone that we've done very well with. We've had cash on the sidelines, and for new money, we're putting it to work.
Okay.
I mean, that's
I hear you.
that we are
good
doing.
To know. Degas, is now the time to do this? Is Gerstner right? Are we at or near a tradable bottom? Is Firestone right? Are we at that point where you got to start putting some money to work, that this has just gotten too far to the downside in some of these names, which have gotten absolutely destroyed?
Scott, I think what we have to do is still focus on quality. One of the names that we talked about is DraftKings. And so when we look at DraftKings, it doesn't meet our requirement for quality. And so ultimately, DraftKings has increased their long-term debt to about $1 billion over last year. And so they have a heavy debt load. And also, we looked at, what's a good company if you want to get in that space. We like MGM Resorts. So this is the time where you focus on your discipline and you and we're still buying quality names. So at this level, you can buy quality names. I don't agree with just buying the bottom fishers because you may still get hooked if you buy too early at this point.